Don't dilute your focus from whatever it is I'm trying to bring your attention to. If you went and just looked at yesterday's price action and you tried to look for things that are taught on my YouTube channel outside the scope of what I was doing, you would be very frustrated, which is the reason why I walked everybody through the top-down approach from the daily, 4-hour, 60-minute, 15-minute, 5-minute chart. I gave you the very levels that I'm going to have on my chart and what I'm looking at. Those levels are going to be influential in what price is going to do. And what's it going to do? It's going to gyrate around inside of Thursday's range. It's not going to go above Thursday's high. It's not going to go below Thursday's low. And it's going to attack that 38.64. And like gangbusters, delivered beautifully. And good old ICT was right there to scoop up on it. Recorded it, showed you the whole logic and how to trust when you're in. I get this question all the time. How can you trust holding on to your trade? Well, apply what I just went through with Friday's trading. You know, 38.64 was a hard level. That was something that I brought everyone's attention to, and it's drawn on the chart well before any real reference to it. It's there. Those are the levels. Anytime I have a level on my chart, we are extending them in time. Extend them in time. To when? The next trading session. We were together in the morning, and then the afternoon's going to be trading, right? We still had trading hours. I just said, close your charts, enjoy the rest of the day. Knowing damn well that most of you aren't going to do anything with what I've already said in the charts. And I'd come right back in and show you this is what you missed. Those levels, if you extend them into the 3 o'clock hour, you'll see that they're right there, lining up as what you would expect real support to act as. So that was one of the problems I had as a developing student. John Murphy's book, Technical Analysis of the Financial Markets, that is a retail trader's Bible. If you do not have that book, you need to get it and read it. And everything in that book, turn it upside down. And you will be a 90% bracket success story. It's just that simple. Everything in that book is horseshit. It's wonderful because it's programming everybody to do the dumbest shit in the world. Look at charts this way. And when you do, you shit yourself. Your account's blown. You have loss after loss after loss. It doesn't make any damn sense. And when I said to myself, I am not looking at this shit like this no more. I'm gonna fade this. And what gave me the idea was, there's a pattern, the head and shoulders pattern. It's a topping formation. And I mean, when I was trying to learn how to be a short seller, and that was one of the things I was afraid of, I didn't understand, how can you sell short something you don't have? How are you going to sell something you don't own? So it was a real struggling point for me, because, like I said, I'm not a mental giant, but the long and short of it is, when I first started dabbling in it, the pattern that I was trusting to be the reason why I'm going to sell short was the head and shoulders, where you have a swing high, a higher swing high, and a lower swing high. And it's like 3 swing highs with one higher in the middle. And then you connect the lows that run beneath the left shoulder and the right shoulder of that price action. And it should project lower the same amount or real close proximity to the range from the trend line connecting the 2 swing highs lows to the highest high. And trust me, if you don't know what I'm talking about, because I'm just listening to myself now, it sounds like a bunch of shit. And it is. But if you go to Google and look up head and shoulders price pattern, you'll see exactly what I'm talking about. Well, that was the pattern I was trying to train myself to trust as a short seller. Man, I got my ass handed to me over and over and over again. And when I look back at my journals, it's the times when I'm fucking trying to do like the Friday PM session where I'm buying right there. I was looking at that as some kind of a topping pattern. Not that was a head and shoulders pattern, but I would have been looking at that as, okay, it's done. Now I should start going down. Why? I don't know. It just felt like I should expect it to go down there. And that's exactly how I trade as a 20-year-old. It probably should. Probably should. That's not a model. That's guessing. So a lot of the shit that's in that book by John Murphy is wonderful when you know how to trade like I'm teaching you. If you see those retail patterns in the market, in the price action, while my logic that I'm teaching you and how the markets are algorithmic, if there's a wrestling match between what's in those fucking book pages and what I've taught on my YouTube channel, that book's losing. There's your inside edge right there. If you can combine the times when algorithmically the things I'm teaching are likely to pan out, and you can see a retail fucking pattern that's in that book or any other YouTube channel that teaches that horse shit, that's losing and I'm winning. My logic is the market. That shit is just pictures and candlesticks and bars. That's it. Animal patterns don't fucking exist. That's all contrivance. It's all bullshit. You're making excuses for something that was completely in your favor, not because of logic. It just was happenstance. And that's why their hit rate sucks. And they have to do heavy leverage trades to get themselves out of drawdown. I don't have no fucking stupid ass, 50%, 60% strike rates. Fuck that shit. Okay. If I got to work within that, to me, that's gambling. That's gambling. If I can't know with a great deal of assurity that I'm on the right side of the marketplace, number one, how do you get like that? You use a top-down approach. Look at the weekly candle. Is it likely that the weekly candle is going to expand higher or lower? You're not trying to predict the close. Is it likely to expand higher or lower? Right away, that's 80% of your whole bias problem. A lot of you don't even look at the weekly chart. You're looking at the 1 and 5 man chart because you see me trading there and you think I'm deriving everything from that time frame. I'm not. I'm starting all the way on the weekend tonight. I'm going to look at a weekly chart, not because I'm trading, but it's just because it's pattern. That's what I do. It's my routine. And I'm going to get a feel for what's it likely to be reaching for on the weekly chart. And that's my number one bias. I try to formulate every pattern with the most leverage and maximum risk management behind those trades in that direction. Right away, that removes the bullshit that most of you are going to blow your account on. If you trade like that, it's going to be very difficult for you to blow your account if you have discipline. You still can, but it's more likely that you won't because you'll be trading mostly in the right direction. No, how do I know which one's going to? Everything that you see me teaching in price action, you apply to a weekly chart. Is it in going towards a fair value gap above the market price? Is it going towards an old low below market price? It's either going to an inefficiency rather above the market or below the market, or it's going to a high above the marketplace or below a low below the market price. That's it. That is it. You have 4 conditions divided into 2 premise. It's going up to do one of 2 things: go in and revisit an inefficiency, a fair value gap, or it's going above an old high for buy side liquidity. 2 things to worry about, folks. That's it. It's only 2 conditions. That's it. 2 conditions. If it's not likely to go up, it's going to go down. So what's it going to reach for? The nearest inefficiency, fair value gap, or the nearest short-term low. And the nearest short-term low or inefficiency, if it's being bearish, you determine where you are in the market price during the times of the day when you're going to be engaging in trading. Is there enough of a range to allow for you to profit? If there isn't, you just don't do anything. You sit still, wait for a new opportunity. How hard is that? For some of you, it's impossible because you don't have discipline. You're not willing to wait, and you have to wait for these things to come together. There has to be an agreement of multiple facets in time frames, logic, time of day, economic calendar. All those things have to come into the equation. Otherwise, the results you're going to get are random, like it was for me. And when I got good positive results as a 20-year-old, not even trading any of this shit because I didn't know these things. I was just using stupid books. And I'm talking dumb books. And I didn't have a real good head start until I got Alexander Elder's Trading for a Living book. And the only thing good about that book is multiple time frames, 3 time frames. Okay, not just making your trade decision on one. But the beginning of the book, where it talks about how you have to deal with the mental things. And they talked a lot about alcoholism. Not that I've ever drank alcohol, because I've never drank alcohol, but I was raised in an environment that had alcoholics in it, and they were dysfunctional. And I had an uncle that introduced me to trading who was a functioning alcoholic. So all those things that he mentioned in the beginning of that book, which I think is absolutely essential reading. And again, I'll say the name of the book, Trading for a Living by Alexander Elder. Now, I have all his other books. Fuck them. They're not as good. The beginning of that book, before he even gets into technical stuff, the beginning of that book is the gem. Understanding things from a psychological standpoint. In my opinion, that part of that book is way better than Trading in the Zone. Trading in the Zone is sugar-coated bullshit. Okay, no disrespect to the man, it's a good book, but Alexander Elder's portion of the book where it's all talking about the wrestling match that we have to deal with, and it made sense to me because I watched how all those things impacted my family members who were drunks, and how they couldn't succeed, and how they blamed everything outside of themselves. And that same shit happens in trading. Just because it's not alcohol doesn't mean you're not fucking drunk. You can get drunk in these markets and not even being profitable, but still drunk in the sense that you can't stop doing it, and you keep doing it knowing it's hurting you. And I did that in the beginning as a trader. And when I read his book, it made so much sense to me because I was like, wow, I'm fucking up, and I can't see I'm causing it myself. And I'm repeating these same things that are problematic. And even though I'm not a drinker and I've never drank alcohol, I could see very easily how I would be a terrible person as a drunk or a drinker of alcohol. And this is why I never done it. And well, that's not entirely why. My 16-year-old uncle passed away from a drunk driver hitting him, and he was drinking while riding it, and he's no more. So he was like a big brother to me. So that was a major thing in my life, why I never became an alcohol drinker and a cigarette smoker and a drug user. So I've never done any, I'm a straight arrow when it comes to that. But that book had a lasting impression on me as a developing trader. And I don't think I would be where I am today had I not read it, because it gave me a perspective on how humans interpret adversity, how we interact with adversity, and how we deflect the personal invitations that we place into our environment. And then when it comes home to roost and we have to deal with the consequences of that shit, we don't want to own it. It's somebody else's fault. And that you can't do that in trading. Like you cannot have that characteristic in trading. You own it. And if you suck as a trader, you have to admit that you suck. Either stop trading or find someone that can teach you how to do the right things, and then give yourself a lot more time than you think it's going to require. If you can't do that, just don't fucking touch these markets. I honestly mean this. Don't even trade, because if you can't wrestle yourself into submission over things like I'm talking about now, it won't matter how many times I sit with a live stream. I could literally push the button and you trade right behind me. And when I stop, you're going to fail, because you haven't wrestled those demons that are, they're beneath the surface. You deal with them every day. They cause you to have anxious moments for no real reason, or to be angry and bitter when you're really no reason, to be jealous. All these things are character flaws. You have real issues going on inside of you. And if you have those things going on in your personal life, I'm telling you, the only thing that these markets are going to do is put a spotlight on those things, and they're going to amplify it. If you're a fucking drunk and you can't handle yourself with alcohol, or if you do recreational drugs until you lose your mind and shit, these markets are going to cause you to do more of that shit, and it's going to be the callus that does your ass in. You won't be able to look at, I'm making money, it's going to keep me from doing those things. No, it's going to cause you to do more of those things, because when you get in these markets, the wrestling match internally, you can't make that candle go up. On Friday, I was 2.5 minutes late on when I thought that target was going to hit. I banned a guy on my YouTube channel and talking some shit. Oh, nobody can do that. Dude, I do it a lot. I just happened to be 2.5 minutes late on that one. But I'm usually within a 3-minute window, just like on forex. I'm usually 3 to 5 pips away from the highest high and the lowest low. That's the range of variance I'm allowing myself for precision. I'm usually exiting before that. Why? I want to be exiting, and I learned this from Larry Williams. I want to be exiting as it's sliding into where I think it's going to go, because even if I am, profitable in the trade, I may not be able to get that last bit off because of spread, because of it just simply not going where I thought it was going to go. Because it mentioned earlier, forex, every broker is going to have a different high and a different low, and that's an inherent problem in that asset class. And if you're demanding precision, you're going to have a lot of compensation with highs and lows and targets. So the way I compensated for it was I would get out 15 pips, sometimes 20 pips before it would go to where I thought it was ultimately reaching. which was in many of your eyes probably, an over kill for it. But I got to live with myself, right? So to be comfortable with what I was doing, that's how I did it. And I allowed the analysis to reward me and say, yeah, it got to where I thought it was going to go. And because it's my results and nobody needs to see what I'm doing, I don't have to say, oh, well, fuck you. Even though I thought it was going to go to this level, it didn't go there. I don't have to listen to the bullshit. Because even though if I do what I do and did on Friday, if I did it every single day of the week next year, I'd still have assholes and asshats in here trying to talk some shit because they're miserable pieces of shit. They suck. They hate their life and they can't do this. So they outwardly manifest what they're feeling about themselves. And that's what goes on in this industry. All the shit talkers, all these jealousy and these people that simply can't shut their fucking mouth or step up for real. Those types of people, they're plagued. They're plagued with real problems. And that's what's holding them back. Because if they weren't being held back, you would see all kinds of proof of them being able to do what, like you saw me do yesterday. That's real precision. That's real algorithmic delivery. Okay. Not retail shit. Okay. None of that stuff that's being used and tossed around as Enigma. Nobody knows Enigma. I've never taught it to anybody outside my family members, and they're never going to know it. Okay. I don't give a fuck. You can drag my ass in front of a court. CFTC will not pull it out of my ass either. I am not going to teach it. You want to see me demonstrate? I absolutely fucking can, because it looks just like yesterday. Now, I am ready. I'm ready to teach you way beyond you thought you'd ever be able to become good at. But if your head isn't in the game the right way, if you're in here to try to debunk, do that before I start in February, because you can do it. You can go through some videos and it'll come to a quick conclusion that, yeah, you can't debunk it. So put that to bed. Show up in February. On the 7th of February, I will resume mentoring. I will be live streaming on February 7th on YouTube. And we'll all come together and we'll start outlining what our expectations should be. And I'll start teaching you over the chart real time. And I promise you, you will learn over time. It won't be, oh, I watched that one live stream. Now I know it. No. You need to make sure that you understand that this takes time seeing things repeat. The things that I'm going to talk about, they won't feel like they make that much of an impact. Like I didn't learn anything, because you're all looking for entry patterns and indicators to flash across your screen and shit moving around on your chart that hides price action. Fuck all that. That's nonsense. Okay. The algorithm is not looking at triangles and patterns and emojis swinging around on a chart. Okay. That's all nonsense. That's attracting, like a carnival. You remember going as a kid, walking through a carnival, and you got the carnival barkers. Hey, come on over here. $1 gets 3 chances. Let's go. You can do it. Get the pretty girl up here. She can do it better than you, guy. Come on. Jealousy causes the guy to say, you know what, asshole, I'm going to go there. I'm going to win. And then he's spending his money, losing, and his girlfriend's embarrassed. And the carnival barkers made money and put the coin in his pocket. You can't fall victim to shit like that. You can't be induced into doing dumb shit because a chart looks flashy, or it looks more technical because it has more lines and indicators and shit all over it, like these heat map trader guys. There's a guy I'm watching on